Okay, on the strength, what we're going to do is take a look at the strength and the cash targets in this segment, and probably on the next segment we'll look at the standard deviation of the strength and line that up with the Keltner. Now, the number itself. Again, we're calculating every individual stock and coming up with an aggregate number. Now, an individual stock by itself isn't that significant, but when you start getting larger numbers, once I get, a dozen stocks or more, this gets to be pretty darn reliable. Now, what we're looking at, again, is on the upper end of the screen, it goes from a factor of +1 to -1, in both studies, same study, +1 to -1. And I have these horizontal lines at the -0.4 and +0.4, the 40% levels. And what occurs is that this strength number on days when it's going to be basically just a moderate day, no great shakes to the upside or downside, you can trade channels with it, it's going to play itself inside this 40% level, positive and negative. It occasionally got a little bit above and a little bit below, but pretty much this substance of the day is inside the 40% level. The beginning of the 25th, we started off with a very negative number. We got down to, it was very quickly by not even 15 minutes into the market, we're at -69%. And that right away is not a very good look. But based on opens, it actually got itself up to a positive, let's focus in on it here if I can get it. I'll have to pull it up here so you can see it. Positive 31%. Right away I have, on very negative days, both of them should be below. Now I'm going to take you to a couple of other images here that are not quantitative. It's just something to look at, which I will post, or obviously since we're working on a live webinar, you will be able to see. And it looks like several balls of yarn thrown out onto the floor. Obviously you could see this just on a listing on a matrix grid of the stocks, but this horizontal line right here is the zero line, represents the close of every individual stock, and what you're looking at here are the percents below of each individual stock, percents below their respective closes. So for example, this outlier here that's way down here, that is number 18, that was -4.59 at that point. And if you take a look at number 18, you're looking at Coca-Cola. One outlier doesn't really affect the index. Two, not so much. Once you get to three, then all of a sudden you've got the index being affected. But what I take a quick look at are the opens. And I've got a split decision here. Even money on both sides. For it to really be a negative day, to take it down another 5 points below where we already opened up at, this has got to also look very identical to this, and it's not. Now, I mentioned that target pricing are not support resistance levels, and on the first level, they are not. There are prices to which the market ought to hit or gravitate towards. And as you can see, it punched the low number, and statistically, I already knew it was a 5-point adjustment, so I knew I was right there. Now, once it gets to a target, now it's a different story. It can be treated as a support or a resistance level. The first point is just simply get there and being able to anticipate it getting there. And in the middle, we will have another session on just the overnight and how to treat that. But we already knew before the open that we were looking pretty bad. So we were able to target this actually before the open. So we're there. Now you have the natural price number, the price action itself. It rallies, it comes back a second time, rallies, and hits it a third. Now you've got the prices themselves, but you have something that everybody else does not. You have this target number, and it's a reliable number. So now it confirms, it gives you that much more support that you've got a reliable spot here in which to, if you want now, to either sell puts and get some good pumped premium out of it and work it. It could be naked, it could be a net credit spread, however you want to work it. Or you can pick it up on the long side. And what we're going to want to do is we're going to want to take a look then at the standard deviation of the strength number in order to figure out how to pick this up. So let's move on to that. And if I get close to the 8-minute mark, I will continue this on the next session. But again, all right, we have the numbers. We have a contradiction, not a contradiction, but nevertheless a non-confirmation based on the opens. We're taking a look at the skewing, and notice that we got non-confirmation here. And now what we want to do is take a look at the standard deviation of the strength number, and that is what this looks like. And this will probably go into the next session. But again, study based on relationship to closes of previous day, study based on relationship of opens of today. Upper standard, lower standard. 25% off of the upper standard, 25% off the lower standard. Now, when I get strong days, had this been a confirmation on the opens where I had a strong day down, and conversely, the same thing happens on strong up days, is that the deviation, standard deviation, channels itself between these 25% levels. That's not what occurred today, but that is why those exist. And based on closes, it was strong, so therefore I require on this study, this is what I'm requiring, that in this case, if I'm looking to do a pickup on the long side, I want both deviations to be below their levels that I require. In this case, it's the hash mark for today, and on the opens, it is the lower standard. Both must happen simultaneously. And it has, and one other thing is that for the standard deviation to work on this, I have a ramp up period of a half an hour. This has to get past Mountain Time, 8 o'clock, East Coast, 10 o'clock. It has to get past this level, and it just barely got there right just after 8 o'clock. And then again, let's take a look at this one right here. We got it at 9:06 Mountain. So that is a marker. That tells me that, all right, I know, once again, we're going back, we know that we're below on the valuation, overall valuation, we're below one standard. We take a look at the price action itself. We are at 5 points below our low target. We know that the strength is not confirming based on opens, and we know, again, when we look at the ball of yarn, as I call it, the opens are skewed not as negatively as they should be for this market to fail lower. So now I've got a 9:06 time marker from the strength at this level here, and now what I need to do is to take a look at the cash pricing as to where it is at 9:06, and then also the Keltner. And what I'm going to do is to pick that up on the next segment. So we will end this right now, and we'll pick the discussion up on the next video.